Today, we saw stocks going up. We saw stocks going down. The volatility index was back on the rise again, up 47 cents on the session. However, how low can stocks go? If you guys know anything about Tom Lee, you know he is a perma bull. And Tom Lee even says we may see a 7 to 10% correction over the next 2 months. Now, why is that important? Well, if we look right here at this graph, we know September historically is a very weak period of time. And more specifically, the last 10 trading days of the month are the weakest part of the month. So that's something we most certainly need to consider. Now, if we come over and look at the SPY from the high all the way down to roughly down to 10%, that would take us where? Right into this minus development area. You might say, Mike, why do you keep talking about these profiles, minus development areas, value high, value area low, and point of controls? Well, today, if you guys join me during the live stream, we had a lot of amazing calls. For instance, when we looked over here at the ES, we drew out this level right here. I kept telling traders, watch for that level to get tested. But wait, this morning, we also talked about the minus development area on the NASDAQ. And I kept talking about the likelihood we get a D as in dog shaped profile. Now, if we look at how the indices fared across the board, the Dow was up 38 points. The NASDAQ was down 52 points. S&P 500 down 8 points. Russell 2000 down 0.4. We look at advancing issues versus declining. There were 53% of issues declining on the day. Then when we come over and we look at the sectors, we can see utilities leading the way. That's not what we want to see. Followed by consumer defensives and real estate. The laggard out there today was energy. Now, energy being down is good for us, the consumer at the pumps. If we come over and take a look at crude oil, yesterday, I warned you guys about this magical blue line. And yes, I'm joking about it being magical. We basically drew it right near the swing point over here. I said, watch out, highly probable we come up and test that, but we also marked off this breakdown point that said we're likely to come back and test. We hit that level, the market rejected. As long as we stay below this blue line at 69.57, crude oil is likely on a path lower. Where might that be? Probably down here towards these lower swing points down below us. Then as we come over and look at the dollar index also forming a potential lower high and actually never made it up to our breakdown point at this moment. Then we come over and we take a look at the precious metal gold. And so far, we're still holding up at this upper level consolidation. We have some wicks forming, and this is still constructive in the course of watching gold try to make it up towards the ABC pattern completion at 25.86. Now, if the stock market is going to get a big move in the near future, we need to see Nvidia participate. And if we look at the price action on Nvidia today, we see we're in a downturn. We have a series of lower highs that have formed. And now we have this little minor downtrend. The candle today could be kind of an inverse hanging man candle. This could be part of a bottoming pattern, aka a tradable bounce. However, seasonality does not favor that. And if you look out here on the 5-minute chart, we kept talking about this all day long during the live stream. In case you guys didn't know, I streamed live at 9 a.m. In the last 2 days. We have streamed the entire day the stock market is open. Also stream at 8:45. So if you don't want to miss out on that, make sure you subscribe and you have the bell notifications turned on for all. But when we kept talking about Nvidia coming down, we've also had conversations about what is causing Nvidia to come down. Right here, Nvidia sell-off, renewed growth concerns, hammer stocks. But wait, that probably wasn't it. Because if we look right here, Nvidia gets DOJ subpoena, escalating antitrust probe. But wait, there is more. Because if we look right here, Nvidia says, we have not received subpoenaed by the Department of Justice. So let me know in the comment section down below, who is telling the truth? Did Yahoo Finance get it right when they report that the DOJ has subpoenaed Nvidia? Or is Nvidia correct saying that they have not been subpoenaed by the DOJ? We come out here and look at the fear and greed index. Right now, we're sitting at 53. Earlier today, we were over here in greed, and yesterday we made it as high as 69. But just like that, boom, we're back into neutral territory. Now, if we come over and look at some of the high-flying stocks out here, we take a look at Apple today. Apple today trying to firm up with a hammer candle. However, still down for the session. The bright one out there for the day was Tesla, up $8.81. And for all intents and purposes, the ABC pattern could still be intact for Tesla, bringing it up to 248.71. Also filling the gap over here to the upside. Then we jump over and we take a look at the diamonds, the Dow Jones, and it's still holding up relatively well up here near all-time highs in the market. When we look at the small caps, however, we saw the small caps today gapping lower, came back and filled the gap. And that's something else what I warned about during the beginning of this morning's live stream. The first 30 minutes of the live stream, I do try to dedicate to market analysis, overnight volume profiles and all that. But I said 2 days of gapping down is always suspect, and I'm always leaning more towards looking for that gap to be filled, and that's exactly what transpired today. The MACD indicator is trying to cross to the downside. Then as we come over and we look at the QQQs real quick, notice the Qs had a potential for a bull flag pattern. Yesterday, we closed below that level, and today we formed an inverted hammer below that area. Now, can we regain that trend line or not? The jury's still out. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passed in as little as 1 day, and $35 reset fees. However, the biggest one is $85 lifetime activation fee across any of the evaluation account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. On the daily chart, the MACD indicator has crossed to the downside. Then as we look at the 4-hour chart, we are down below the 0 line. We have a bearish cross of the MACD lines. Then on the 1-hour chart, you can see the MACD indicator trying to base out, basically firming up at this area. Now, if this low can hold, then maybe we start to work our way up here just a bit. On the 30-minute chart, what do we see? The MACD indicator does have a bullish cross, but I want to warn you guys about this real quick. We talk about this time and time again. If we continue to consolidate near the lower levels, the MACD indicator gets back towards the 0 line. Watch out, that could be nothing more than a recharge point for another leg lower. Now, as we look at the profile shape today, notice it was a D as in dog, and it is a very well-defined D as in dog shaped profile. So what does this mean for tomorrow? With a D-shaped profile, we expect a breakout or breakdown from this pattern. Quite often, the first move ends up being a false move, AKA we see a trap in the market. So be on the lookout for a potential trap tomorrow. Now, when we come over and look at the futures markets, notice we got to pop up. However, we were unable to make it to that structure breakdown point. There's still a lot of time left in this week, but this is going to be an area we most certainly want to pay attention to. We can see so far from this week, most of the volume has been built near the lower edge of this profile. Then as we come over and look at the daily profiles, this is something that we talked about during the live stream. We had the potential for the ABC pattern to the way down. You can see we hit the 100%. We overshot it down to the 127. Then it started to firm right back up. Now, if I go ahead and remove all the drawings off this chart real quick, one thing I want you guys to pay attention to, all right? We have the D as in dog shape profile. We're a little bit below the point of control. If we start breaking below the lows tonight, watch out. Maybe the news tomorrow will bring us right back up. This could be where the trap could be lying, or maybe the traps could be lying a little bit higher. We look at the volume profile levels, value area low will come in at 18,910.75. The point of control will come in at 18,959.75. Value area high will come in at 19,057.25. Now, when we zoom this back a bit, one of the areas we want to focus on is this minus development area. Now, I'm not as concerned with it as I once was, and the reason for that is we've already came up into it, we came down. We came up into it again, we came down. The next time we come up into it, we are likely going to break. And one of the areas we were watching today during the live stream was if we could break through this area, we had an order in this profile, right? So when we look at this profile right here, this could be a target location. There was a resting liquidity that we identified with Bookmap sitting up there at 19,170. We're trying to front run that to about 19,168. You can see we never made it towards that price point. We also want to pay attention to the other minus development areas, and we'll touch on these a little bit more in the beginning of tomorrow morning's live stream. Now, if we come over and we look at the SPY real quick, you can see we also formed an inverted hammer, but notice, where are we sitting at? We are sitting right next to gap support. Yesterday, we made it down there. Today, we try to get a feeble little bounce, and now we're sitting right back down there. So we got to be on the lookout. Do we flush down tomorrow, potentially filling the first gap, coming into where this high volume area is, or do we potentially start flushing even lower and go ahead and fill in both of these gaps? Now, I would favor more of coming down, getting a bounce, and then working our way down. If we just simply slide right down right now, that is going to be problematic moving forward. When we come over and look at the economic calendar for tomorrow, pay very close attention. We have two separate jobs reports coming out. 8:15 a.m., we have the ADP non-farm employment change numbers coming out. Then at 8:30, we have the weekly unemployment claims. Then at 9:45, we have final services PMI, followed by the 10 a.m. ISM services PMI. So tomorrow is going to be action-packed with news. And then on Friday, we have more jobs numbers coming out. Now, why are their jobs numbers so important? Well, that's basically going to give the Fed how much interest rates they are likely to cut. Are they going to cut 50 basis points, or are they going to cut 25 basis points? Right now, we can see there's a 43% chance the Fed will cut by 50 basis points. However, I want to caution you guys on cheering that news. And that is because when we look at this chart right here, every time the Fed has went on an aggressive rate cutting campaign, it has always ended bad for stocks. So if you're a stock market bull, you do not want to see the Fed cutting rates by 50 basis points. If you're a bear, you are saying, come on, baby, Jay Powell fumbled the ball once again. Please cut rates by 50 basis points. Now we come back over and we look at the SPY. We go down to the 4-hour chart. See the MACD indicator is rolling over to the downside. Now I do want to pay attention to the minus development area. Maybe we just dip down to that area tomorrow. We start to bounce back out, or maybe we flush all the way down here towards the high volume area about 542. On the 1-hour chart, MACD indicator, you can see starting to base out down here. Then on the 30-minute chart, you can see it's based out. We have a slight separation to the upside. I'm going to classify today's profile shape as a D as in dog. And notice in this morning's analysis video, this area right here is an area we drew out in this morning's video. Look right where the SPY came up to. Boom, we hit that level. We rejected right back down. And for all intents and purposes, right now after hours, we are currently trading below value area lows. So maybe tonight we'll get that flush lower, which could provide a buying opportunity. And then we see stocks starting to go back up for a short-term bounce in the market. And the only reason why I'm saying that is when we have a D as in dog shaped profile, a lot of times the first way we break ends up being nothing more than a trap, and we end up going the other way. Now we come over and look at the S&P 500 on the 4-hour chart. Notice we've been able to come into this minus development area from the weekly profile. Yes, it took several weeks to get back there. We are finally there. Now you can see we've already came down there. We rejected out. Now we're back down there again. Keep in mind the second or third time into a minus development area, we normally will flush lower, and that could really open the door coming all the way down here towards the minus development area, somewhere in the ballpark of 54.42. Now that's going to be interesting as things start to unfold. When we look out here on the daily profiles, notice where we came to today, right towards the first minus development area. Now I'm going to go ahead and clean off all these drawings real quick to clean up the charts a little bit. We have a D as in dog shaped profile. When we look at value area high, comes in at 5543.50. The point of control will come in at 5532.50. Value area low coming at 5521.00. As we're looking at this, notice right now we are pressing on value area low. So if we dip down tonight, especially if we break the low and we start coming back up, then this is going to be a situation where if we break the low and we get back above today's low, I'm going to look to target value area low, point of control, value area high. Then I'm going to look to retarget this minus development area and even the point of control that's been untested from yesterday at 5583.25. Now, if you want to learn how to use Bookmap, check out my beginner's guide to Bookmap right here.